Look at the insane speed of development. Just last month, there were rumors essentially floating around that China is intending to close the loophole used by all their different tech firms for foreign IPO. It was first leaked from a secret informant to Bloomberg surrounding how China is reportedly planning to close a loophole that has long allowed all these different Chinese tech firms like Alibaba and Tencent to list on foreign stock exchanges. So this ban will most likely prevent future companies from tapping into foreign capitals. And just a few weeks later, relevant officials from the China Securities Regulatory Commission, which is CSRC for short, took the public position that hey, if the companies actually comply with domestic laws and regulations, companies with the VIE structure are eligible to list overseas after filing with the CSRC. Are eligible, by the way. I saw what you did there, bro. Just give Didi some space. I know some of them have been a little bit playful and have not really been listening to what you have been saying, but just give Didi some space to breathe. It's already a done deal. You know what else my secret informant told me? He said that if you smash the like button now, your social credit score will increase by 69 points. So what are you waiting for? Quickly turn the like button blue. Anyway, I know that usually media outlets would like to keep their sources anonymous so that they can keep them low profile and also not blow the cover of their informants in order to further the relationship and to get more scoop in the future. They always like to end off with people familiar with the matter or people inside XXX organization said something like that. So the main problem with such an arrangement is just the sheer lack of accountability and fact-checking processes. So I also have a source telling me that hey, Munger bought again in Q4 of 2021. Do you trust me? Or will you wait for the actual publication of the date and the transaction? So many of these media outlets are probably just exploiting their position of credibility to start spreading rumors or even speculations. Furthermore, the subject matter is China. Who is going to ensure responsible reporting? China? Ha! Ironic, isn't it? So let's also square away what it means for Chinese stocks specifically, because I do see some mixing of concepts here and there in the online domain. So the VIE structure and the delisting concern should not be mixed into the same discussion. I believe many viewers of varying YouTube channels out there are aware of the different complex structures of a VIE. I'm not going to act all knowledgeable and tell you I fully understand and grasp the entire concept of how a VIE structure works. In simple terms, the VIE structure just allows founders and investment funds to set up offshore vehicles that can sign contracts with the Chinese firms, giving them effective control and the profits of the different entities. At face value, it definitely seems like a very deliberate effort from the Chinese side to set up a complex offering to essentially quote-unquote scam investors. So many people are just screaming at the top of their lungs, it's a scam, it's a scam. Never invest in Chinese companies because you don't own anything at all. Let's not forget, VIE is not a new invention. It dates all the way back into the early 1990s and even 2000s and has buy-ins from institutional investors until today. That said, it has also been known to investors around the world that it is essentially a legal structure that is operating in a grey environment. So the legality of VIEs is predicated on the fact that it's done to work around some existing laws in China, such as, and namely, the restriction of foreign access and foreign ownership. So initially, many people are under the assumption that the Chinese regulators knew of such arrangement, but did not went ahead to enforce the law on foreign ownership. Hence, this can be seen as some sort of an implicit acknowledgement from the government that they will accept such a transaction. Over time, more and more investors started getting jittery, even floating the idea that hey, China will now close up this entire loophole, and some even speculate to the extreme case where China can essentially eradicate this entire VIE structure and all foreign ownership will turn into worthless pieces of paper with no recourse because everything was illegal to begin with. So the initial genesis of this VIE was basically a win-win for China. Chinese companies can go out to raise foreign capital, which will help the local economy, yet at the same time, there will always be this fail-safe mechanism where foreign capital do not have effective control over all these different Chinese entities. So in this case, other people bear all the risks and only China reap all the benefits. Why do you think the Chinese government will be against this idea? However, as time goes by, more and more companies started using such a structure to list overseas and to raise even more foreign capital to help expand their businesses and whatnot. So the longer they practice this, the more legitimate it gets, because it's essentially a proof of concept. It's exactly the same line of logic on blockchain and on Bitcoin. So many more people trust gold compared to Bitcoin just because of its sheer history and legitimacy. And the most important currency for legitimacy is actually time. Hence, rather than keeping things at the status quo, the Chinese regulators actually decided to take a more proactive approach in trying to regulate this grey area, rather than keeping it under the status of strategic ambiguity, which serves little to no purpose to both parties. If you actually know what I'm referencing to, but who am I to judge, right? Anyhow, given this recent development, we no longer operate under the ambiguity of implicit acknowledgement. We are now in the phase of explicit understanding that if complying with domestic laws and regulations set out by all the different Chinese regulators, companies with VIE are eligible to list overseas after filing with the CSRC, as guided by an official spokesperson of the CSRC. So what does this official recognition of VIE structure mean for all the different Chinese stocks that are listed overseas right now? Does it mean that they won't get delisted? Short answer is no. This VIE progress is just a small step to ease potential investors' concern on this crazy rumor that the Chinese government have the intention to pull a quick one on the foreign capital markets. It's really just solving one problem out of the 1001 problems out there. But hey, at least we are making progress. So China has always been very indifferent with however the rest of the world view them. They probably only have to keep their propaganda in-house, and if the locals believe them, that's all that matters. But evidently, they have been stepping up their game recently to be a lot more vocal on the international stage. Delisting concerns, however, remain high up on the priority list. I've done up a video previously to just talk about the current status and the different dynamics of the negotiation. You can check this out. So legitimizing VIE does not mean that Chinese equities become less prone to delisting. In this case, the US and Chinese regulators will still have to square out their individual differences and reach a compromise, and at the same time achieve their own individual objectives to de-escalate this entire delisting concern. So I don't foresee it to be a very quick process, but I think we can see major moves soon in the coming year or so, because someone has to budge and something has to be done. So to discuss more about this new VIE rule, apparently the regulation also allows Chinese incorporated firms to directly list overseas without the need for a VIE if they meet certain requirements. What is this sorcery? Did Chairman Xi woke up on the wrong side of his bed? Why would there be this huge change in stance? Maybe they suddenly realize the benefits of capital markets. Maybe. Or they are in the process of creating their own capital markets with Chinese characteristics. So I look forward to the maturity of their markets and what kind of magic they can produce. Anyway, I think this direct listing without a need for VIE will never work for investments in industries that are probably deemed as strategically sensitive, such as the internet, fintech, and even telecommunications. So the CSRC also said that the new rule is not retroactive. So companies that are already listed as VIEs overseas are exempt from this stricter rule and regulation. Furthermore, it also explicitly shows the world that, hey, China is currently en route to improving their system and infrastructure of their financial and capital markets. Improving the regulatory system for overseas listing is not just to tighten up regulatory policies, but to promote development and provide companies with clear, transparent, and operable rules for overseas listing, and also a much more stable and predictable institutional environment. Spectacular, isn't it? Seems like someone has a media team on the ground trying to solicit feedbacks and concerns. This is exactly what investors kinda need to hear. Quite a surprise, isn't it? The Chinese government, the communist government, the authoritarian government, the dictatorship, they listen? Wow. Not only that, the draft for this was actually published online to gather public opinions all the way through January the 23rd. So this is not the first time that they went public to gather opinions from the ground. They did the same for the tech crackdown and also on the data privacy regulation as well. So I think Xi and his team really woke up on the wrong side of their bed. I know, naysayers will decry that, hey, these are all just acts, and even if they open it to the public, nobody would dare to provide honest opinions. Whatever you say, bro, the world is never black or white. Today, even if the Chinese government decides to give every single citizen $10,000, you have something bad to say as well. I'm too tired to indulge in playing all these listicle games of what ifs and what nots. Invalidating the VIE was never a concern to me, because if I was really that afraid of the Chinese government pulling a quick one on all these foreign investors, I would have never been invested in them in the first place, and so should you. Hence, I don't expect a major share price rebound on this news, because it's not like there is a huge change in sentiments on the ground, but we shall see. Leave in the comment section down below how you feel about this, and maybe start a hashtag I already knew to express your indifference to this so-called quote-unquote approval. Also, Moomoo is running a Christmas activity until the 31st of December 2021. So where you get a free Apple share and $40 of cash coupon when you make your first deposit amounting to around 2,700 Sing dollars or equivalent. So you can also stand a chance to win an iPhone 13, an AirPods 3 and many more during the limited time rewards promotion. So you can use my referral link down below in the description, and you will also get 180 days of unlimited commission-free trades and real-time market data. With that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!